The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the 14th of August. This happens to be my grandson's 17th birthday, and he is getting ready to receive his black belt in karate. Anyway, that's the end of that. We'll get on to these things. Main thing I wanted to talk about today and start out with, of course, is something that happened this past weekend. I was asked by a foreign exchange website out of Europe, the UK to be specific, to give them a couple of paragraphs or one page about what I thought was the most important thing in trading foreign exchange. And so I said, to look at patterns because the market repeats over and over again. If you look at the past, you'll find out a pretty good idea of what's going to happen in the future. And the second thing I said was to make sure that you look at the opening price of the London market, because that has many times been the high of the day or possibly the high of the week, because that's when the foreign exchange orders come in from around the world, and with London being the Forex capital, that's something that you should watch. And third, I said you should also plan your trades and use discipline to follow your plan. The response I got back was we weren't really looking for something like that. We were looking for something that could help traders, like how do you use the 200-day moving average, and how do you use the MACD, and how do you use stochastics. And so I wrote them back and I said, I haven't heard of those terms before, so I'll look into it and get back to you. And I haven't heard from them anymore. And then you wonder why there's so much competition in our business, folks. You have to pay very close attention to what's going on. One of the things that's happened overnight, in fact, the last 2 days, that I think is very important, and that is what's going on with the market in Japan. If this is the Nikkei Dow that's up here, as you notice, over the last 4 or 5 days, it's been very, very weak. And today they received the most bullish news they've received in 6 years. They were looking for the GDP to come out at 2.5. It came out at 4.2, and the market was due to be sharply higher. It opened 200 lower. This is not good news for the Japan market, folks, when you get news like that and very bad action. So be very aware when the news is really good and the market doesn't rally. That's usually not a very good sign. So pay particular attention, to that. That's a very, very important thing, to look at. Now, one of the things that I tried to focus on over the weekend was to see, where we were with the market. And, we have Mercury coming into retrograde motion as of yesterday. And as you can see here from the NASDAQ chart that we had on Friday, we were at major support in the NASDAQ. That was also true in the S&P when we got down to that 2230 something, 2234, whatever it was. We were at major support. So that's mainly it. Well, the reason why I have these Andrews lines up here is someone asked me a question, are they useful? And of course they are. This is the basis of how Bollinger Bands work. You're looking at the standard deviation from the median, and that's why they are important. But when they match up with Fibonacci numbers, that's what's really important. So if you pay particular attention to that, it sometimes can be very helpful. I believe that we're in the midst of somewhere between a 2 and 5 day rally. Remember, a week from today, we have the big solar eclipse hitting the United States at around 2:19 in the afternoon, New York time. So that'll be a big event, to watch very closely. Now, I have a human interest story that, folks, I have to share with you because it's so special. Many years ago, when I was before Drexel days, I was, in the coin business because I collected gold coins, and I met some of the coin dealers, and we became very good friends. And one in particular became one of my best friends. And we used to go down to he used to go to the racetrack before Drexel days, and then after that, of course, we hung out quite a bit. And this is the season for Del Mar, which is down in San Diego County. We used to drive down there every Friday. 4 of us used to go down, myself and 3 corn dealers, and we would play the horses for the day, have dinner, and come home. And it was really a lot of fun. So it was just for about 5 weeks, but we did it and we enjoyed it. I called him up because he's been in a nursing home for 22 years. He had a brain aneurysm, and when they took him into the hospital, the doctor operated on the wrong side of his brain, if you can believe that. And then, of course, he had the aneurysm, and then they had to redo the operation on the other side. We got a monster settlement, well over $10 million, but it hasn't done him a whole lot of good over the past 23 years because he's had to been under pretty extensive care. And he's only about 60% of what he used to be. But we were chatting about those old days at Del Mar, and he remembers the time we made a bet on an exacta, which you have to pick the horses 1 and 2, and we bet the 135 exacta, and it paid like $600 for a $2 exacta. And he said, "I wish I could do that again." And I says, "Well, you can do that." I says, "We can make a bet, through off-track betting." I said, "I can call a friend of mine. He can make the bet for us." And he says, "Okay," and that's a $12 bet to box 3 horses. And I said, "Well, if you're going to do that," I said, "why don't you play the trifecta where you have to pick them in order? In other words, they have to finish 1, 2, 3. That's a really hard thing to do because the odds of those things are better than 101. And that bet was $6. So for $18, he decided that's what he wanted to do. I said, "Look, I'm going to make the bet for you." Folks, you're not going to believe this. The trifecta paid $1,007 for the $6 bet, and the exacta paid $287 for the $12 bet. And I called him up and I told him, guess what? I said, we were not able to get the bet down. And of course, he was laughing because he had been listening to the races on the radio. And he said, "I know you're joking me." And I said, "Yeah, I sure am." And he said, he says, "Tell the guy that made the bet, to keep out a couple $100 for himself." And I said, "No," I said, "he's got more money than he needs, so he'll send you the total amount." But that made his day, it made his week, it made his whole year. And August 11th, the day we made the bet, was his birthday. So that's a human interest story. Bob happened to be one of the guys that was involved with the Laverne Redfield collection, which was the greatest coin collection ever to hit the market here in the United States way back in I think it was 76 or 77. I'm not sure. Yeah, it was 76 or 77 as I remember. He was one of the 4 coin dealers that Steve Markoff had picked to help disseminate the collection. There's so much misinformation about that Laverne Redfield collection. You're hearing stories about $20 and $50 million. The amount of money that they paid for it was a little more than $7 million. And one of the first bags that they took out of the basement was a bag of 1,000 silver dollars, totally uncirculated. I believe they were 1925s from the San Francisco Mint, and each of those coins back in those days was $2,500. That was $2.5 million just in that one basket. And there was a lot of money in that basement. Anyway, that's just it. We'll move on to the next one, and then we will move on. No, I was not friends with Seabiscuit, but I was friends with Man of War. And I will tell you this. I will give $10 U.S. money. Man of War lost 1 race in his whole life. It was at Saratoga Racetrack. And if someone can tell me the name of that horse in the next 5 minutes, you're not going to give you that long because you'll go and search for it. But it was at Saratoga Racetrack. He was beat 1 time by a horse named Upset at 99-1. It's the only race he ever lost. All right, we'll be back to business, folks. I'm sorry. And Bob Miners.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Over to gold and silver. By the way, at the break, we're going to have Bob Miner, one of the premier Elliott Wave people on this planet. He's going to be our guest at 9:30 from Dynamic Traders. And hopefully we can get him in. You know, I know he's coming on, and hopefully the contact is what we need. Anyway, we'll take a look at silver here. As you can see here, you know, with gold breaking out to the upside that everybody's talking about, you know, we're up near the highs that we made back in April, making that triple top in the gold. You can see silver lagging badly. As a matter of fact, the highs that we made on Friday was a 78% retracement of the high from June and 61% retracement from the high in April. That made that a 135 pattern. So that's why I would be a little reluctant to follow this breakout in the gold market. Now, regarding the tensions that are going on in Korea, no one's going to North Korea. No one's going to know what's going to happen there. But frankly, folks, you know, this is nothing. The market acted virtually nothing like what was happening, you know, back in when we had some really, really serious things happening. Look at the S&P here, folks. This is the S&P. It basically did nothing. I mean, it's down. It was down, you know, right down 15 points. It matched the same correction that it made in June. That's all it really did. So that's all that's really happening there, you know. So pay attention to that. It could be really good. Oh, we've got a horse. We got a horse. Oh, boy. Okay, we've got a caller from Detroit. John, are you there?
Yes, I'm here, Larry. How are you doing?
I'm good. How are you? Did you have the name of the horse?
The name of the horse was Upset.
Absolutely. You're absolutely correct. Where do I send the $10? Hey, how about if we give it to the charity that Tom is...
Let's do that.
Let's do that, okay? And the price of that horse was 99 to 1. He went off at 111 to 1, I believe. Mm-hmm. Yeah. But anyway, there's a few things that I remember about horse racing because I'm absolutely probably the worst handicapper ever. But fortunately, I'm very lucky with numbers. So I play exotic bets like trifectas and exactas, and I do pretty well. But if I try to pick a horse, wow, I don't do very well.
Well, it would be like me. I couldn't pick the winner between the Titanic or the iceberg. you know.
Yes, I would probably bet even on that one myself. But thank you for calling in about that. I appreciate it. But how did you know that? Was this something you remember? Or did you Google it?
No, I Googled it.
That's what I thought. That's okay. We'll still make the donation for you. Okay.
Have a great one, Larry.
You bet. We're going to put some money on Tom's charity here, helping kids with handicaps for fishing. I think that's a great thing to do, and I'm certainly going to get some of my friends to chip in and give a few bucks, because that's something that you can really do to help folks, especially those that don't get to do the fun things that we get to do. Believe me, I had a great deal of thought about that as I spoke to my friend on Friday, because he's been in a nursing home for 23 years, and this guy was really active at one time. Okay, I've had a question about Bitcoin. I wanted to bring it up here. I don't know anything about Bitcoin. I'm just bringing the chart up here to let you folks see it. It follows the ABCD patterns really nicely. There should be a pretty good correction up here around 4,200. As you can see, that's pretty much what's happened here so far the last, since we made the high here at almost 4,200. So we should back off, a little bit from that level. But there's enough people that are involved in Bitcoin now that it's getting a lot of play. And hey, anything Bitcoin could hit 50,000. Why just 25,000, Tom? It could very easily do that. And I'll tell you why. Remember, you guys don't remember this, but back in I remember it because I was trading them. This was tulip bulbs back in the 1670s. Tulip bulbs went from $1.25 to the cost of 3 houses. So that was equivalent at that time. That was about $30,000 for a tulip bulb. And so why can't Bitcoin go there? I don't know. That's it's 4,000. I don't know what they started at 9 years ago, but it's probably a couple $100. I mean, that's a heck of a return. That's even better than Amazon. But whether these things work out or not, I just don't trust the computers doing this stuff, folks. That's the bad part. By the way, they have one other type of Bitcoin coming out that's called the ICO. I believe it's the initial coin offering. In other words, they're putting coins out for companies that can't, borrow money through regular places, and that you can borrow money by buying some of their coins, and these coins act as like bonds or collateral, and that's what gives them thing. Now they're not even going to be required to register with the CFTC or anything or the SEC or anything. I mean, I don't know anything about that. But that's just amazing to see what is going on there. It's a little scary, and frankly, I think the governments around the world are going to be a little reluctant to do something, and they can shut down these things pretty easily, I would believe, because that's what governments do. Whether that's true or not, I'm not sure, but we'll have to just have to wait and see. I'm not involved in the Bitcoin. I bring it up because people ask questions about it, and that's basically, all I'm looking at. Here's where we stand in the market with the Russell 2000. We had the big breakdown from the high that we made up there. We made the 3 drive to a bottom pattern. We stopped right near the 78% retracement. We left 2 gaps on the way down, so we should get a nice bounce here. In the IWM could get as high as 140, but the important thing is how many days is it going to rally? If we only get a 2 or 3 day rally here and then the market breaks down, folks, we're looking at something really negative. So it's not so much the strength is important too, but watch the time that this rally takes. That's the main thing. Remember, we're over Mercury retrograde that started on the 13th. As Norm Winsky pointed out, that's going to be a really key day for a whole lot of things, including the grains and the stocks and bonds. So watch that very, very closely. And again, we do have that solar eclipse coming in on a week from today, which will be, really interesting to pay attention to. So that's the main thing. Someone asked the question, do I think we're going to make a new high in the market? And I say I don't think so, but I'm just like everybody else. I'm wrong a lot and right sometimes, so pay attention to it. If we look here at the VIX, you can see even with thermonuclear war, folks, all we could do was make a 61% retracement of the high that we made back in October of 2006. Well, it's actually November of 2016 when we had the Trump election, the presidential election. So this market has done not very much, given the fact that we were looking at potential thermonuclear war. Now, when we come to the break here, we're going to be talking to Bob Miner of Dynamic Trader, who is, like I mentioned before, one of the best Elliott people that I've ever met. And we'll see what he has to say. He's got some really nice charts, to share with us, and I think we'll enjoy that quite a bit. So when we come up to the break here in 4 minutes, hopefully we're going to have Bob Miner of Dynamic Trader as our guest, and we'll be able to chat with him about some of the things that we're looking at. If you have any questions this morning for Bob or myself, you can give us a call at 877-927-6648. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Robert Miner of Dynamic Traders. Bob, are you there?
I'm here. How you doing today?
I'm good. How are you doing? Haven't seen you in a long time. You still look as good looking as ever?
Better. I get better with age.
Where are you living these days? Are you in Colombia or are you in Colorado?
Well, right now I'm in Colorado. I spend about
Mhm.
half the year in Columbia and half the year in Denver.
Wow, it's a long way from Tucson, partner.
Yes, it is. It's
Yeah, Bob and I
also
used
not
to.
quite as hot.
Oh, this is true. Bob and I lived about a mile apart when we were in Tucson. We had Arch Crawford there and a whole bunch of other people. Bob, I'm showing the first chart that we're looking at here, which is the S&P, where you're looking at a potential wave 5. You want to explain to the folks what we're looking at here?
Well, yes, pattern can be very important in the markets, and one of the best ways to look at pattern and trends and counter trends is with Elliott wave. And I look at a real simplified version of Elliott wave. And what's really important right now is that in the SPX, we are potentially at the end of the bull trend from the March 2009 low. So I'm assuming you have the weekly chart up that shows the 1, 2, 3, 4, and 5 with a question mark above it.
Yes.
Yeah. Well, this is really a time that you want to at least be aware of this. Patterns don't always work out perfectly like we anticipate, but when we get to extremes, and that's when it's most important. And we are right now at an extreme with a potential completing this 5-wave bull trend up from the '09 low. And I mean, at it meaning this past week was an outside foreclosed reversal week, which is really important. And potentially it completed it last week.
Mm-hmm. Now, what are the probabilities, Bob, of us going below those March lows? What do you think the probabilities will be?
I don't look at it that way. But
okay,
the trading,
that's good. Well, that was the question
yeah.
Someone asked. I'm just repeating.
Yeah, I know exactly. I look at it as if I identify what I would call a high probability or extreme outcome with a high probability outcome. And if we take out the July low, that'll be the initial confirmation that we've completed that bull trend. And the second confirmation would be going below the March low. That was what I call a pattern reversal signal. And it would mean that that pattern is complete in the longer term. So it's pretty dicey right around now. You know, we'll know in the next couple of weeks. Okay,
well, let's make sure. Now the next one I'd like to switch over to would be the gold chart that you have. It's a weekly gold chart, and I would like to have you talk to the folks about this potential. Looks like a 3-drive pattern here. You're talking about a potential for a weekly high of August 14th, and today's the 14th, so we're pretty close in here. You want to explain to you what you're seeing here?
Yeah, what we're looking at is just some simple time analysis. That one of the ways I look at timing in the market. And this is pretty simple. Anybody can do it on any program they got. We're just counting off highs and lows and low to highs, that sort of thing. And what's really interesting and symmetrical since the December low is each drive up has been between 4 and 6 weeks. Last week was week number 4, and this is week number 5. And so at the very least, it's a time when everybody else might be getting excited about this recent drive in gold to say, we're coming up against time resistance just as you come up against price resistance. And we're right on the daily counts. It's early this week, you know, the best count is today, but they don't always hit it right on. But the point is that when it's just like coming into price resistance. When we come into time resistance, and if you look near the bottom, this momentum cycle that's going on, it's right. Momentum is right in that overbought extreme zone from where the last weekly highs are made. So that's partially confirming the potential that we're very near a high that's going to last a few weeks.
Now, one of the folks have asked a question, do you look at silver in relation to what's happening with gold?
I don't. I mean, I'm always looking at silver, gold, and the XAU, and they generally make turns around the same time, but they oftentimes have different patterns. So, I mean, if gold's going to top, silver's going to top. And silver has been, you know, slightly relatively weaker than gold. So more than likely, if we have that weekly decline, silver is going to decline a bit more than gold will. Silver may even take out, I think it's the July low comparable to the gold low. But I really, you know, I try not to forecast. I try to look for opportunities. and technical positions, time, price, pattern, and dual time frame momentum, to where you can make a trade decision with minimal capital exposure. So this is one where I would not be immediately excited about gold and silver, or the XAU for that matter, that they're more than likely at or very, very near a weekly high.
Mm-hmm. Okay, Bob, the next one we're going to show here is this gold market looking at a very much, really longer term, going back to the highs that we made back in 2011. And you're saying here that there's a possibility that we could be in a bull market here over a long period of time. Is that what you're trying to refer to in this chart?
Absolutely. Absolutely, yeah. My first newsletter I did back in the mid-'80s was a gold precious metals timing report. So I'm always really interested in gold and the long-term positions as well as just trades. And if we look at this is textbook Elliott wave pattern, 5 waves down into the December 15th low, that wave 2 or B correction into the December low. So when I say that we're near a weekly high, that just means we should have a correction over the next few weeks before we begin the next leg up, which next leg up could be quite substantial.
Mm-hmm. We have a question from one of our listeners, and that is, of all the markets that you look at, which do you feel are the best that fit with the Elliott wave theory?
Well, definitely the stock market, stock indexes like the S&P. That's how the theory was discovered or designed from by Elliott in the first place, and it's because it has the widest crowd of interest for various reasons. Commodities is much less so, so it's a stock market. Gold is really good, bonds are really good, the dollar and euro are really good. Those are the 4 sectors that we follow in the precious, or not the precious metals, but the DT reports. But I key off the stock market of all the indexes. It's always the S&P that is the one that I'll key off of.
Mm-hmm. And one other question that someone is asking is, you do trade. Well, I already know the answer to this, but you can tell them you do actually do trading. I know that for a fact, but you can go ahead and explain to them that you do.
Yes, I do trade. In fact, way back in '93, I won first place in the Robbins World Cup Futures Championship, and actually 2 years ago I was 4th place in that. So I enter that every now and then just to show people that, yeah, I'm actually making trades every day. Well, not every day, but on a regular basis.
And your son Jamie trades too, doesn't he?
Yes, he does. He trades primarily not primarily, only the Forex. He actually has a report called the No BS Forex Trading.
Okay, that makes sense. Now, we have one other chart. Well, we got 2 other charts, but I wanted to go to the next one, which is going to be the, I think this one is the SPX on a really long-term weekend. We've got to take a break here, Bob. Will you stay with us?
Are we having a coronation?
No, well, almost. You're going to get your crown here in just a minute, but we got to pay a few bills. We'll be right back with Bob Miner of Dynamic Trader.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Bob Miner of the Dynamic Trader. And Bob, I've got the weekly S&P cash up. You want to take a look at that? This is the one that, this is where week of August 11th. That was Friday. So you want to go ahead and talk to us about that one?
Is this the one that begins around the February 2016 low?
Yes, that is
yes.
it. Yeah.
Okay. This was I was focusing in on the near term here. The other one that we looked at had data all the way from the 2009 low. This is from the February 2016 low. And what I do is I like to focus in from a known point. I call the February 2016 low known point as a wave 4. So the objective then is to identify when the end of this section of the bull trend is complete, because that'll indicate the higher time frame section is complete. So what I'm showing here is a potential, again, 5-wave advance off the February 16th low. And what's really momentous about this particular position is the high on August 11th, the week of August 11th, was made precisely within the wave 5 price target zone that I had for weeks for subscribers. And it was just short of what the maximum part of that zone was, reached into the zone. And that's really important. So we have price, I'm just showing one on this chart, one of the time factors, which is the 100% alternate time factor, which just means very simply is that into the week ending August 11th high, that was exactly 100% of the time of what I've got labeled as a wave 3. So at all these turning points, the subsections of the higher time frame trend should be related by a very limited number of ratios at that particular point, and that's what it is as of last week. So it's pretty exciting, and particularly when we look at that and say, okay, our weekly momentums are dual look back overbought, same position as weekly highs have been, and then we've made don't show it on here, but we made a daily dual look back momentum reversal. So man, it's all come together, just hasn't been confirmed yet.
Mm-hmm. Now the next chart that we're going to take a look at is the SPX on the daily, which is a little bit shorter term. You want to talk to us a little bit about that? That's pretty much confirming what we're talking about right now, as I recall.
It definitely is that now we have wave 5 of 5 of 5. All exactly in the target zone anticipated, several weeks ago. So we've got, I always look at everything in multiple time frames. We have a trading time frame, and then we have a higher time frame that helps define the trend, and then we have a shorter time frame that helps define entries and exits, so our capital exposure is minimized in case we're wrong, which, I have been a couple times in the last few years. And so
I can't
typically
remember
look
it, but maybe you have
No.
a better memory than me, but I
Oh.
don't remember it.
Well,
There was that
deleted them
time in
all off my computer.
1936, but no one remembers that one.
Exactly. But I tend to trade daily trends, daily and weekly trends. So I'm always looking at the weekly, daily, and then down to the 240-minute to identify actual entries. But this is really, these three charts I sent you, it's showing the higher time frame potential 5-wave trend from the '09 low. It's showing you the lesser time frame 5-wave trend from the April 2016 low, and then this is showing then the one lower time frame trend from the March 2017 low. So we at the August high, and again, I'm not making a forecast, I'm identifying conditions with a high probability outcome, but we have 3 degrees of trend that all hit their targets last week. So we'll see. It needs to be confirmed. That's what's most important, is not get too excited until it's confirmed. But and a trade below the July low that's shown on this chart will confirm at least the lower time frame reversal, and potentially it'll cascade into the higher time frame.
That's a 2,400 in the S&P, pretty close to that figure.
Yeah. Yep.
Okay.
Close around 2,400, and that's time to get really nervous.
Okay, well, I understand. Oh, we have a question from one of your followers from about 25 years ago when you were the premier GAN guy. And his question is, he enjoyed all the stuff that he learned from you, but when was it that you made the transition from GAN to Elliott Wave, and what caused you to make that transition?
Well, I never transitioned one to the other. It's my original course from the late 80s. It was titled the GAN trading course, home study trading course, but even that course incorporated Elliott Wave almost 30 years ago. So I do less GAN orientations, more Elliott Wave. What I learned from GAN that's integrated, highly integrated, how I look at the markets and make trade decisions now is about proportions of these subdivisions. And GAN was real helpful about focusing on how markets are proportional, and as well as patterns. GAN had some interesting patterns that he worked with.
But another question that he's had is, but you've never gone into the astroharmonic stuff, have you?
I haven't. It was too difficult and confusing for me.
Welcome to the club.
Yeah. So I said, "What's this? I don't know what all this they're talking about." I just studied it for a while. Yeah.
Okay, we tell the folks how they can get you'll send a free copy or your newsletter out to the folks if they request it.
Well, I guess I got to now.
Well, I thought so. I'll send you the check anyway. Listen, tell the folks how they can reach you.
Go to dynamictradersplural.com.
And that's all you have to.
That's all you got to do. Well, to get the free copy, send us an email and tell us you're listening to the show, because I don't have any specific, free copy thing available. But all you got to do is send an email at dt@dynamictraders.com, and we'll be glad to get you a free copy.
Okay, someone's asking a question. What would be the advice that you would give to someone that wants to start Elliott Wave theory? How would they start to learn that?
Oh, there's just a wealth of material, books and material on the internet. My book, High Probability Trading Strategies, has a chapter on really simplified Elliott Wave. So I guess I'd recommend that. And plus, you get a bit on dual time frame momentum, price and time, and specific trade strategies. So check out High Probability Trading Strategies on Amazon.com.
And also, Carolyn Broden worked with you in Tucson for a while, didn't she?
She did.
And now she's known as the Fibonacci Queen, so you did a good job there, too.
It's where the teacher becomes a student. She's done fantastic.
Yeah, that's good. Well, I'm glad to hear that. Well, you've done a great job for everybody else. I want to thank you for being on our show here, and we will have you on again soon if you don't mind, probably, sometime in September, October, when we have a possible correction coming and when we'll find out where a bottom could possibly be.
That'll be fantastic, yeah.
Hey, listen,
just keep sending me those checks.
Okay, it's in the mail, my friend. It's in the mail.
Oh, yeah. Fantastic.
It's Bob Miner, folks, of Dynamic Traders out of Denver, Colorado, and Cartagena, Colombia. And Bob, thanks a lot, buddy. I wish we were around having dinner again, but maybe one of these days we'll get together.
Fantastic.
Hey, thanks a lot.
Later.
We'll be right back, folks. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and one of the markets you might want to take a look at today is the crude oil complex, either gasoline, heating oil, or crude oil, that's acting relatively well given the fact that, it's had a lot of bad news recently. But as recently as Friday, of course, you'll notice here that we're going to be looking at the potential for a little Gartley down there, and we've already taken out 4,900 this morning, so that's going to be quite interesting. My guest tomorrow, I don't have a guest for Tuesday, but on Wednesday we're going to have Bill Meridian on, and later in the week I'm going to have Dale Pinkert on, and then on Friday we're going to have Bill Koval. He's got some really interesting long-term projections that he's done on the stock market that will be very interesting to look at, because I've seen the work and it looks quite interesting. Hopefully I'm also going to have one of my students from 30 years ago who's now done a website that is doing quite well in foreign exchange, and I'll have him on. It's Richard Staten out of San Diego, California. So we'll have some other guests on to share some of their ideas, so you don't have to listen to the old Italian flop his gums too much, but kind of watch this crude oil market, because it could have legs if we get it much above $51 a barrel. And heating oil looks absolutely bullish. I mean, I don't know why it's way up here with no correction, but heating oil looks extremely bullish from a technical standpoint. That would be the leader on the way up, is what I would think would be happening. So that's neither here nor there, but we want to watch that very, very closely, of course. We will see how that turns out over a longer period of time. So we will have Bill Meridian on Wednesday, and of course he's one of the premier people that we like to have. Well, all of them are premier, but he's certainly in the high class area, like we have with Norm, and also with Bill Meridian and Shane Smolian, who's been absolutely on fire. So those are the ones that we're looking at, and we'll see how high this market's going to rally. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.